Pakistan just did something it has never done before. In only 3 months, the country earned over $1 billion from IT exports. That's right, $1 billion in a single quarter. Headlines have called it a record, and analysts are calling it a turning point. But is this a real digital revolution or just a one-time lucky fluke? Let's find out. In this video, we will look at how Pakistan achieved this, what is driving this, and whether the momentum can actually last. When you see a billion-dollar headline, it is tempting to celebrate, but the real story usually lies beneath the surface. According to the State Bank of Pakistan and the Ministry of Information Technology, IT and IT-enabled service exports crossed 1.057 billion in the first quarter of the fiscal year 25 to 26. That's from July to September of 2025. It is a growth of 20.5% compared to the same period last year. And the month of September alone has generated $366 million, setting an all-time monthly record. To put that into perspective, Pakistan's total IT export for the entire previous year, the fiscal year of 2024 to 25, were around $3.8 billion. That was itself a record. The sector now contributes roughly 45% of total service exports of the country, making it one of the top 3 foreign exchange earners, right after textiles and rice, which are physical goods. For years, IT exports have hovered below billion-dollar quarterly mark. Crossing it now signals that something fundamental may be changing. But what exactly has changed, and why now? Let's break down the forces behind this surge. The first factor is Pakistan's freelancers. Over the past 5 years, Pakistan has quietly become one of the top freelancer economies in the world. From Upwork to Fiverr, thousands of Pakistanis sell software development, digital marketing, digital services directly to clients all over the world. They might be working from homes in cities like Faisalabad, Rawalpindi or Peshawar, but their clients are all over the world in cities like New York, London or Dubai. According to a 2024 Pioneer report, Pakistan ranked among the top 5 fastest growing freelancer markets globally. Many of these freelancers might not appear in the formal export statistics, but their combined earnings feed the ecosystem, paying for courses, tools, and local startups. Every line of code written in Lahore or every logo designed in Multan adds a drop to this billion-dollar stream. The second factor is policy reforms. The State Bank of Pakistan has recently allowed IT exporters to keep up to 50% of their foreign earnings in special accounts. To the uninformed, it might sound like a small policy tweak, but it has fixed a real pain point. Before, IT companies had to convert most of their dollars into rupees immediately, losing flexibility and value. Now they can reinvest directly in marketing, software tools, and staff expansions. The third factor is global demand. Worldwide, businesses are outsourcing software development, cloud services, AI integration faster than ever. Countries like US, UK, countries in the Gulf are constantly seeking reliable, lower-cost talent pools. Pakistan, with its over 30,000 registered IT and ITES companies, has quietly positioned itself as the mid-tier outsourcing destination. It might not be as massive as India's IT industry, but far more affordable and English-speaking compared to Southeast Asia. And let's not forget the demographic edge, a youth-heavy population that's eager to work, learn, and adopt. Together, these factors explain how Pakistan has hit a billion-dollar mark so fast. But the real question to ask is, Can this growth be sustained? See where Pakistan stands, let's look around its neighborhood. India earns over $250 billion from its IT and related services. That is nearly 70 times that of Pakistan's own exports. Its companies like Infosys, TCS, Wipro have become globally recognized brands by moving from cheap outsourcing to high value innovation. Bangladesh used to be behind Pakistan in IT and similar services, but it has managed to cross 5 billion in ICT exports recently. This is thanks to strong digital incentives and women-led freelancing programs. Even the Philippines, with fewer engineers but strong English skills, earns around $40 billion from business process outsourcing every year. Pakistan, in comparison, is just getting started. But being smaller can be an advantage. Smaller markets can pivot faster, and Pakistan's lower cost of living means a single dollar goes further when reinvested locally. The potential is real, but the climb will be steep. Let us not forget that every boom has its bust, and Pakistan's digital surge is not an exception. Let us take a look at key factors contributing to the risk. The first risk factor is over-reliance on services. Most of the export value is coming from outsourcing, not original products. That means the revenue is tied to foreign demand, not to intellectual property built at home. Without developing homegrown software or SaaS products, Pakistan remains vulnerable to market swings. The second factor of risk is informal inflows. Many freelancers are still using unofficial channels to receive their payments, either to avoid taxes or due to the friction in the banking system. That means actual earnings might actually be higher than what has been recorded, but it is also less predictable. Third factor of risk is policy inconsistency. Every few years, tax incentives change, sometimes even retroactively. Exporters never know which regime they will be under within the next quarter. The fourth factor of risk is infrastructure gaps. Broadband quality and electricity reliability remain uneven outside major cities. Imagine trying to deliver a project when a power cut wipes out your entire day's work. It happens, and it costs. The fifth factor of risk is talent drain. Pakistan trains capable developers, but many either migrate or work remotely for foreign employers. That's great for remittance, but not so great for domestic industrial growth. The next factor of risk is limited venture capital funding. Local investors are very cautious. Without serious VC activity or government innovation funds, most startups struggle after early growth. Each of these factors has been chipping away at sustainability. The next challenge for Pakistan is not earning another $1 billion, it is keeping this growth consistent quarter after quarter. So, what would it take to make Pakistan's IT boom last? 1. Predictability. Investors and entrepreneurs need stable policy. No surprise taxes, no sudden regulatory shifts. Countries that build sustainable export sectors did it by building trust over time. 2. Infrastructure. Pakistan needs to expand its technology parks beyond cities like Karachi and Lahore. It has to invest in providing consistent broadband and power even in the smaller cities where untapped talent resides. 3. education, and skill building. The university curricula lags far behind global tech trends. Private sector can help by funding coding boot camps, AI training programs, and apprenticeships. 4. Move up the value chain. Don't just sell time and code, sell products, sell platforms. When Pakistani companies create tools that others license or subscribe to, export income will become recurring and resilient. 5. Strategic storytelling. The country's tech brand matters. India has Digital India. The Philippines has It is more fun in the Philippines, even for outsourcing. Pakistan needs a unified message, something that tells the world what makes its talent unique. Industry experts estimate Pakistan's true IT potential to be around $10 to $15 billion per year. If these reforms take hold, it is ambitious, yes, but not impossible. The past 2 years show that even with global headwinds, Pakistan talent can rise when given the right conditions. Let us imagine two futures. In one, policy uncertainty returns. Freelancers get frustrated, the world moves on, exports drop, talent leaves, Pakistan misses another global wave. In the other one, we double down, not just on coding but on creativity. Universities teach product design, not just syntax. Entrepreneurs build SaaS and AI startups that attract global capital. And each billion-dollar quarter becomes routine, not remarkable. Which future unfolds will depend on what we do next in our boardrooms, in our classrooms, and even our home offices. So yes, Pakistan did just earn $1 billion in IT exports in a single quarter for the first time ever. Clap, clap, clap. The question now is whether we can turn that record into a rhythm or whether we are going to go back into our old ways. The world is watching, and so are Pakistan's next million digital workers. If you enjoyed this breakdown and want more deep dives into Pakistan's economy and tech trends, don't forget to subscribe and share your thoughts below. Do you think this boom is going to last? Or is this a one-time fluke?